our agenda today. We're going to look at the IA standards as relative to audit reports. We're also going to look at the supplemental guidance on audit reports. This supplemental guidance is subtitled Communicating Assurance Engagement Results, and we'll get into that in a moment. And then the bulk of the webinar is going to focus on those 5 attributes of a good audit write-up: criteria, condition, cause, effect, observation, and recommendation. Okay, and then we're going to take a few minutes near the end, and we're going to talk about audit finding headlines. Now, the audit finding headline captures the reader's attention, and it also gives you an opportunity to focus the reader on the area that you feel is the most important. Then we'll do a recap and a Q&A at the end. Okay, so what does the IA say about audit reports? Standard 2400 states that the internal auditor must communicate the results. Now, usually, you'll notice it doesn't say write a report. It just says communicate the results. 99% of the time, the results are going to be in the form of an audit report. Okay, and then audit standard 2410 states the criteria for communicating an audit. The audit communication is going to include at least these 5 things: the objective, the audit objective, the audit scope, the conclusion, and then within the conclusion, the recommendation and the action plan. Now, as I said, our focus is going to be on the last 3, the conclusion, recommendation, and action plan. Now, as I said, you might notice that there is no specific requirement by the IA in terms of writing up an audit observation, but they do have what they call a recommendation or best practices that they suggest using, and that's going to be the IA supplemental, and we'll talk about that shortly. Okay, let's look at now the audit observation process. Let's look at that now. This comes from the IA standards. An engagement observation and recommendation emerge by a process of comparing criteria. The criteria is the correct state with the condition, and the condition is the current state of what they're actually doing. Now, whether or not there is a difference, the internal auditor has a foundation on which to build the report or the audit finding. Okay, so in terms of the process for determining whether there's an audit observation, it will come about through this process that they're talking about, comparing the criteria with the condition. Now, whether or not there is a difference, and we're going to talk about this, the internal auditor has a foundation on which to write up the observation. Not even when they differ, there are going to be times when you may not want to write it up, and we're going to talk about that as we go along. Let's look at this graphic of how the audit process works. Okay, let me see if I can get a pencil. Okay, now the first thing you have to determine is whether the condition is the same as the criteria, because that's what you're going to be comparing. You're going to be comparing the condition and the criteria. If they are equal, if what they're doing is the same as what the criteria call for, then you're not going to have a finding. Okay, but if it's not, then the first thing you're going to do, which seems a little odd, but what you want to do is you want to determine why is there a difference. You want to determine the cause. And the reason you want to determine the cause is because whether this is a significant problem or not, you need to know the cause so as to be able to make a viable recommendation. You can't really make a viable recommendation to keep it from happening again until you know what the root cause is. And as we go along, you'll see how that plays out. Okay. Now, your next big decision is this one. Is it significant? You want to make sure that this decision can be based on a number of factors. You might want to ask: is the problem is it a systemic problem, or is it a one-time error? Is there a large amount of money or a small amount of money? Is this worth the time of senior management and the board to look at? And the reason is, and I can't stress this enough, insignificant findings can diminish significant findings. Let me say that again. Insignificant findings can diminish significant findings. Now, when you have a finding, I'm not suggesting that you ignore. You never ignore a finding. The only decision you have to make is whether or not that finding is going to find its way into the report or whether it will be resolved in another way. When I was at MARTA, we had what we called a verbal recommendation. A verbal recommendation would be a finding that we would treat just like a regular finding, but instead of putting it in the report, we would keep it in our work papers and follow up on it just like a regular finding. These were the kind of problems that were usually resolved before the end of the audit. Okay, but if they weren't, even if they weren't, we would keep up with them and make sure management resolved them. But we wanted to make sure, at least it was my philosophy, that when a board member or senior management picked up my report, if they saw a finding in my report, that they would know that that finding was significant enough for them to address, significant enough for them to read and to understand and to address that problem. So my philosophy is insignificant findings impacts or diminishes the significant finding, and I didn't want any significant finding diminished. And as I said before, you do not ignore any finding that you have. If you have a finding, you want to make sure you bring it to management's attention and that it's resolved in a way that you're okay with. But the only decision you want to make is whether or not that finding is significant enough to go in the report, or significant, or if it's insignificant, to follow through on it kind of in the background, more or less. Okay. So, and what we'll do once we determine that it's significant, then this is where we start the audit process of the write-up, and that's what we're going to be getting into in this webinar as we go forward. Now, I mentioned to you about the IIA supplemental guidance that they have, and the supplemental guidance is not a requirement, but it is a recommendation. And this particular supplemental guidance is the audit report communicating assurance engagement results. Okay, and the observation and recommendations are based on the following attributes, and these are the attributes that the IIA recommends: the criteria, condition, cause, effect, observation, and recommendation. This is where our webinar is going to go, and we're going to discuss each one of those attributes in detail. Okay, let's look at the first attribute: criteria. Criteria is the standards, measures, or expectation used in making an evaluation and or verification. This is the correct state. This is what it should be. The criteria answers the questions: what should it be? What should it be? Okay. And this is the objective basis, and I stress the word objective basis, with which to compare with the actual condition. Now, the criteria usually is a starting point for us. The IIA requires this, and we'll see this in a second, Unless you have adequate criteria, you can't evaluate the controls, okay? And we're going to look at the various types of criteria in a moment, but what happens if there is no adequate criteria? Well, the IIA speaks to that too. IIA standard 2210 .A3A is for assurance, called engagement objectives. It says, in part, if criteria are adequate, the internal auditor must, and I stress the word must. They have, if it's adequate, internal auditor must use the criteria in their evaluation. If it's inadequate, the internal auditor must work with management and or the board to develop appropriate evaluation criteria. Okay? There has to be some type of objective criteria that the auditor can use to compare to the actual condition. You can't use your own opinion unless, let me just say, unless you are considered, generally considered an expert in a certain area. You can't use just your own opinion. So when there's no criteria, or if the criteria is inadequate, the internal auditor must collaborate with management to develop appropriate criteria for the area that's under review. But here's the kicker. You have to understand you cannot proceed without it. Unless you have adequate criteria, you can't proceed with comparing it to what they're actually doing. So you need to make sure you have adequate criteria before you can go forward. Okay. So where do we find adequate criteria? There are a number of different types of criteria that can be used. We're going to look at 4 types, but there are other types such as contract clauses. Contracts can, the clauses in a contract can be a basis for your audit. Is you'd be wanting to find out, is everybody complying with the clauses in the contract? Expert opinions. Now, I mentioned you can't just say use your opinion, but if you're considered an expert, you can use an expert opinion as a basis for comparing with what somebody's actually doing. And you can also look at things like prior performances. That can also be used, because what you would be doing is comparing what they're doing now with what they've done before, or comparing the results of what they've done in the past with what they're doing now. Okay. So, but there are a number of different types of criteria that you can use. But what we're going to look at, I think, are the ones that people use the most. The first one, pretty much, departmental procedures, is probably the go-to criteria that most people use. But we're going to look at departmental procedures. We're going to look at company policies. We're going to look at government regulations, and we're going to look at industry best practices. Each one of those gives a basis with which to compare with what the organization is actually doing, or what the organization has actually done. So we're going to look at examples of each one of those criteria, write-ups of each one, and we're going to decide which one is the best in terms of write-ups we're gonna do. But let me just say, before we look at the first examples, is that departmental procedures are usually our starting point for criteria, because it usually contains all the information that you'll need. It contains the flow of the process, the key personnel, management controls. All of that's usually included in that process, in that procedure. It documents who does what and when. And when you write up the criteria, whichever type you use, it doesn't matter. You need to note the basis for the criteria, and you need to quote it and cite where you found it. So let's look at this example of a write-up. We've got 4 possible answers. Okay. A says inventory procedure A.3 states all inventory should be reconciled quarterly and reviewed by the area manager. B says all time cards must be reviewed and approved by the supervisor. C says investment procedure states all investment transactions should be reviewed and approved by the manager and the director prior to execution. And D says accounts payable procedure, Roman numeral 12-4. Which of those four, A, B, C, or D, do you think is the best write-up for departmental procedures? And you can, if you can, just write in the chat box which one you think is best, A, B, C, or D. I'll give you a minute to look at that and decide. A, B, C, or D. Just take a minute and see which one you think. Okay, I don't seem to be getting any response for this. That's okay. You can discuss it with your colleagues, A, B, or C, and we'll discuss that in about 15 seconds. We'll see which one is the best and why. Okay, in this particular case, A would be the best one, and I'll tell you why. If you look at A tells you, it gives you where you found it, the inventory procedure A3. That's the location. And then it tells you exactly what what that says. It says all inventory should be reconciled quarterly and reviewed by the area manager. So it tells you, it gives the reader where this information, it lets them know that you're not pulling this out of the air, that you can find this at inventory procedure A.3, and it gives them exactly what they want them to look at. Okay, in this case, all inventory should be reconciled quarterly and reviewed by the area manager. B, it could be exactly right. All time cards must be reviewed and approved by the supervisor. That could be exactly right. The only difference is it doesn't tell you where you can find that. Like A did. A tells you where you can find it and tells you what it is. Same thing with C. C says it tells you that it is the investment procedure, but it doesn't tell you where it came from in the procedure. The quote could be exactly right. All investment transactions should be reviewed and approved by the manager and director prior to execution. That could be exactly right. What would have been best, though, if they could have told you where exactly in the investment procedures that quote comes from. And D, the last one, it tells you where it is, but it doesn't give you the quote, doesn't give you the basis. Okay? Let's look at another one. This time, we got a write-up from company policies. Okay? Let's look at this. A says, let's decide which is the best. A says, the Code of Ethics prohibit procurement from vendors where there may be a conflict of interest with the company employees and their immediate family. B says, purchase limit authority for all director level employees is $25,000. And C says, board policy Roman numeral 6, investment, paragraph 2 states, the following financial instruments are prohibited from investment, and they cite derivatives. Which of those, let's take a minute, which of those, think about it, would be the best write-up, A, B, or C? A, B, or C? What do you think? Give you about 30 seconds. Okay. What do you think? The correct answer would be C. The board policy, Roman numeral 6, investment, paragraph 2 states, the following financial instruments are prohibited from investment, and it goes on to cite derivatives. If you'll note, so C is the correct one. So if you'll note, the Code of Ethics prohibits procurements from vendors where there may be conflicts of interest and employee. That could very well be true, but it doesn't tell you where you can find where that comes from. Doesn't give you a basis for that criteria. Same thing with B. The purchase limit authority for all director level employees could very well be $25,000. That could be an exact quote, but it's not the best write-up because you want to give the reader where they can find that write-up. Okay, let them know you didn't just pull that out of the air. You want to give them. I used to tell my auditors, you don't want to just give them the street where they can find it. You want to give them the address on the street that they can find it. Okay, let's look at the next one here. This is government regulations. Okay, let's see which one of these. Oh no, I need to go back for 1 second there because there's one thing I need you to. Oh no, I gotta go back. I need you to look at this derivative, this ellipsis mark where we talk about derivatives. This is, I want you to note that because those three little dots, which are called ellipsis mark, and the ellipsis mark signifies that there is omission from some quoted material. Now, I point this out because it can be very useful to the writer because it directs the reader to the specific information that the writer wants them to focus on. And at the same time, it omits the other non-relevant information. Now, in this section, there were probably dozens of prohibited investments. Dozens. But the only problem in this particular write-up, the only problem the auditor found was in derivatives. So you use the ellipsis mark to omit all the other non-relevant prohibited investments so you can have the reader to focus only on the derivatives. Can you imagine if you had put all 25 or 30 different prohibited investments in your write-up and the reader had to figure out which one is the one that you're having problems with? So using the ellipsis mark reduces the chances of confusion. In this particular write-up, the reader knows that the only problem that you're having is with the derivatives, none of the other stuff. So the ellipsis mark can be very useful for writers. Okay, so now let's look at examples of criteria based on the government regulations. Okay, let's look at this. We've got three possible answers in terms of a write-up using government regulation. A says Sarbanes-Oxley Act requires the CEO to certify the company's financial statement. The Federal Acquisition Regulation 31.205-14 states in part that the cost of amusement, diversion, social activity, and any directly associated costs are unallowable. And then C, Internal Revenue requires a Form W-4 be completed on all employees. Which of those, A, B, or C, do you think is the best answer in terms of government regulation? I'll give you about 30 seconds to look at that. So, A, B, or C. And if you have colleagues, you can discuss it with them, and then we'll talk about it on the other side. A, B, or C. Okay. So let's talk about this. The proper answer is B. That would be the best one. Okay. Federal Acquisition Regulation 31.205, 14 states impart cost of amusement, diversion, social activity, and any directly associated costs are unallowable. As you can see, you've got where you can find it. That's exactly where it is. And then you've got the exact quote. Okay, this is what it says. Now, and you will also note again, there's our little friend, the ellipsis mark. Okay, that means that there's some verbiage between costs and are unallowable that's in there that, based on the writer's opinion, doesn't need to be there. So this is pretty straightforward. Amusement, diversion, social activity, and all that are unallowable. Okay, so if you look it up here, Sarbanes-Oxley Act requires the CEO to certify the company's financial statement. Could very well be true. Could very well be true. But it would be better if you could cite the exact place that quote comes from. That would be a better write-up. Same thing for C. Internal revenue may require the Form W-4 to be completed on all employees, but where does it come from? Where does it come from? You want to put the basis down for the criteria. Okay. Now, let's look at example of the last type of criteria, which is best practices. And best practices is not used a lot, but it is a legitimate criteria that you can use for criteria. Now let's look at this one. We've got three possible answers. A says COSO 3.1 responses that reduce or share specific risk. In this case, they cite reconciliation. B, American Public Transportation Association 2019 publication, page 158, lists the industry average cost per passenger mile as $5.78. And then C, based on my opinion, it should be done like, and then you can fill in the blank. Which one of these, A, B, or C, do you think is the best write-up in terms of best practice, in terms of criteria using best practice? And this one is a little tricky. Okay, so I'm going to give you about a minute to look this over, and you tell me which one we'll discuss which one you think is the best, A, B, or C. Okay. Another 10 seconds, and then we're going to look at this. Okay, in this case, both A and B are okay, because A tells you where it is, COSO 3.1, gives you the quote, and there's our little friend, the ellipsis mark, because I can imagine there are probably a number of different things to reduce risk, and reconciliation is only one of them, but this reconciliation is what we were focusing in on, what we want the reader to focus in on. So A would be okay. Same thing with B. We call them APTA, the American Public Transportation Association. It gives you the publication, gives you the page number, and gives you the exact amount. It's $5 and $5.78. Okay. So A and B would be okay for a write-up. C, as I said before, unless you are considered an expert in a particular area, auditors in and of themselves can't just say this is how it should be. That is probably the worst. Your opinion is no more valid than anybody else's. Okay? So, I do want to pause here for a second. I want you to focus in on this $5.78. Okay? This particular criteria requires a judgmental decision by the auditor, you're going to have to consider how much over $5.78 per passenger mile is significant. You know, if the organization if it was if the organization average cost per passenger mile is $10, I mean that's an easy call. But what if it's $6 or even $7? Is that significant? You know, and a lot of that really would depend really on a lot of different things. And for example, if the organization had a KPI goal of $7 and it met the goal but was still above the industry average, is that okay? Is that significant enough to put in the report? What if the trend over the last 3 years has been where the cost per passenger mile has reduced from $10 down to $7? Is that okay? You know, that's a decision that the auditor will have to make, and it may vary with each auditor depending on the organization, the culture in the organization, the auditor's experience, and various other things. But the thing is, that's a judgment decision by the auditor, and whatever decision the auditor makes, they just need to be ready to defend it if necessary. Okay. Let's look at the keys for writing criteria. Okay. You must use acceptable objective criteria, and usually departmental procedures is what we usually start out with. But as we said, there can be other types of criteria. Okay. And the criteria should be quoted verbatim, and I like to use quotation marks when I use the criteria, when I write up the criteria. And then you want to also make sure you give the reader the exact location of the quotes. Okay, you want to give them the exact look. Let the reader know where you found that particular quote. They'll know you didn't pull that out the air. And then one other thing, you want to, in your criteria, you want to only use relevant information. Okay. And the ellipsis mark helps you to eliminate the irrelevant information. Okay? So those are what I consider the keys for writing a good criteria. Okay. So let's look at the second attribute, the condition. Condition is the factual evidence that the internal auditor found in the course of the examination. This is the current state. And the condition describes what it is, and it's based on the auditor's review of the area that's under audit. So the condition is determined really as a result of the auditor's field work. That's where they check what's actually being done, which is the condition, to what should be done. And that's the criteria. Okay. Now, as noted in the audit observation process, if what's being done is consistent with the criteria, then generally there is no finding. However, if the condition is not the same as the criteria, there may be a basis for a finding write-up. Now, at this point, that'll depend on whether or not the effect or the consequence is significant enough to warrant a write-up in the report. Okay? Now, it's important that the information here, when you do conditions, the information has to be factual, accurate, and as precise as necessary. If not, it could erode the auditor's credibility and call into question everything in the audit report. Additionally, facts can't be disputed. There may be a dispute over what the facts mean, but there should never be a dispute over the facts themselves. For example, if 238 timesheets were reviewed and 14 were not signed, there should be no question about the number, only what the number means. Okay, so let's look at examples of a condition write-up. And I apologize for the smallness of the fonts, but I had to do it this way to get it all in. So let's look at this. This one may be a little tricky, but which of the following you think is the best? A says, we reviewed almost 700 time cards of bus operators at 3 garages and found 77 were not approved. B says, we reviewed the equipment inventory reconciliation at the Orange Street garage for 2019 and found that some months were not reconciled. C says, we assessed 265 investment transactions in the investment office and found all but one transaction had the proper reviews and approvals by the manager and director. And D says, we evaluated 78 credit card statements in the marketing department and found that the department head had reviewed and signed off on 74 of the statements. Now, which of those four, A, B, C, or D, do you think would be the best write-up in terms of conditions? A, B, C, or D? I'll give you 60 seconds to look at that, and we'll discuss it on the other side. A, B, C, and D. Okay, about 15 more seconds. A, B, C, or D? What do you think? Okay, let's look at this. This one was a little tricky because in this case, both C and D would be okay. Okay, if you'll look at them, we see that we assess exactly what 265 investment transactions and found all but one transaction had the proper reviews and approval. So pretty precise on this. We looked at 265, we had a problem with one. And D, we talked about, we evaluated 78 credit card statements in the market and found that the department had reviewed and signed off on all but 74. In this case, I could have written it a little different, but in this case, we had a problem with 4 of the 78, okay? So it's, you got an idea exactly what went on in terms of the observation. But now, as you look at A, we reviewed almost 700 time cards. Well, what is almost? Is it 299, 289, 276? What is almost 700 time cards? You want to look, when you write up the condition, you want to tell exactly how many of these you had, okay? And then down here in B says we reviewed the equipment inventory reconciliation at the Orange Street and found that some months. What is some months? Because some months can be anything more than 1 month. Okay? It can be anywhere from 2 to 11 months. Okay? So, what are some months? So, you want to be down here, you want to be very, very specific. Okay? Now, I also want to tell you, as we go forward, everything, you're going to have A, B, C, and D, and they're all, A is going to all be about time cards, B is going to be about the inventory, C is going to be about the investment, and all the D's are going to be about the marketing department. They're going to track each other all the way through. Okay, just for your information. Okay, so let's look at the keys for writing a good condition, and it's very simple. You have to use only factual information. Facts can't be disputed. Facts are facts. You can talk about you can discuss what it means, but facts can't be disputed. And then the information should be accurate and precise, because if it's not accurate, your credibility can be shot. Okay, if you don't use accurate information, they can use that information to cast dispersion on the whole report. Okay, you can have one you can have one false statement or error, and they'll use that, and 99% of the other stuff is correct, and they'll try to use that against you. So accuracy is a big thing in an audit report. Okay, let's go on. Okay, let's look. So we've looked at criteria, condition. Now we're going to look at cause. Cause, cause the reason for the difference between the expected, which is the criteria, and the actual conditions. Cause answers the question, why is it different? Why is it different? Uh, and cause requires an effort to get to the root cause of the problem, because until you get to the root cause, you can't make a viable recommendation. You're gonna hear me talk about that a little more as we go forward. And the other thing you want to do, the first thing you really want to do on a cause is get management's reason for the problem, or you might want to do research yourself. But even if you do the research, you want to make sure you get management concurrence on the finding to make sure you didn't miss anything. But when you talk about the cause, in other words, you're talking about the reason the condition doesn't match the criteria. This is sometimes a very difficult question to answer. When there's a difference between the criteria and the condition, the first thing we used to do is get management's reason as to why there's a difference. And what we used to do is get it in writing, so you can put their exact quote in the report. You can follow up on their answer or research it if you want to, but I want to make sure, we tried to make sure we would get them to put in writing why there's a difference. Now, when you talk about the cause has to be considered informing the recommendation, because you can't make a viable recommendation until you know the root cause of the problem. And as we go forward, you're going to see how that works out. But here's a question. What happens when you can't determine the cause? The IIA used to have what they call practice advisory. They changed it a few years ago, but when they had it, they had a practice advisory that stated that the internal auditor may suggest further investigation or study if they can't find the root cause. Now, usually, we task the management in the area that's under review to research the problem and submit an action plan to ensure that the problem doesn't happen again in the future. Now, they generally know more about the problem than the auditor, and the caveat for this is that whatever plan they come up with needs to be acceptable to audit, because it's still your audit finding, and it's your responsibility to accept an action plan that you think, as auditors, will mitigate the problem in the future. Okay, so we would do that a lot of times when we couldn't figure out what the root cause, we just tell management, research it and bring us some information. Bring us your action plan concerning showing us what you're going to do going forward to make sure that this doesn't happen again. Now, again, it's your finding. So whatever they bring you, you need to be comfortable with it before you accept it. And also, the auditor can also have the research done by an external party. But the caveat still remains, whatever they bring you, whether it's internal or external party, it needs to be acceptable to internal audit, okay? The internal audit needs to be comfortable enough with what they brought that it's gonna actually mitigate future occurrences. Okay, so let's look at this one example of the causes. Again, I apologize for the smallest in font, but I had to do that to get them all on here. So, which do you think is the best one? The reason there are 77 unapproved timesheets was primarily due to management's oversight on the late shift. B, based on our research, the reason the equipment inventory reconciliations were not done for 3 of the 12 months was because there's only one person trained to do the job, and that person was out on medical leave at the time. Management stated that they were shorthanded during her absence and could not get to it. C says the reason for the one transaction not having the proper management review and approval was an inadvertent oversight. And then D, the reason could not be determined as to why the 4 credit card statements in the marketing department did not have the proper review and sign off. So which of those, A, B, C, or D, you think is the best write-up? And this one, again, is a little tricky, so be careful. But A, B, C, or D, which do you think is the best? Give you about 30 seconds to look that over, and we'll talk on the other side. A, B, C, or D. Okay, this one was really kind of unfair because in this case, because they're quotes, pretty much quotes from management, all of these are okay because all of them pretty much was quoted by management as to what the cause is, and unless you have a different reason, in this case, we had no reason to doubt. Unless you have a reason to, you pretty much take management's acceptance of the fact of what they consider the reason that the problem occurred. Unless you have something other than what they told you, you pretty much take at face value what they said. Okay. Now, I also want to point out to you on in B, where we talked about the reason, and the reason the equipment inventory was because there was only one person trained to do the job. Can you see how getting down to the root cause, that was a root cause? Can you see how knowing that is going to impact what you recommend to them for doing it? I mean, if the root cause was something else, that the place was shut down for 12 months or for 3 months or something, whatever the root cause gives you the ability to make recommendations to fix it where it doesn't happen in the future. And that's why it's so important to get down to the root cause. Okay? Okay, so let's see what it is in terms of keys for writing a good cause statement. Okay? You must know the root cause to make a viable recommendation to mitigate future occurrences. And this is where the auditor really, I say, really earns their money. When you can reach into the future and cause something not to happen again. Okay? So number 2, if the root cause can't be determined, the internal auditor may have the problem researched to come up with an action plan that would mitigate future occurrences. And as I said, the research can be done internally or externally, but however it's done, whatever they come back with needs to be acceptable to the internal auditor. And 3, root causes provided by management should be quoted verbatim. And I like to get their responses in writing. Okay. And then the root cause determined by the auditor should be verified by management. So if you decide, rather than getting the root cause from management, if you decide to research it yourself, whatever you come up with, make sure you run it by management to make sure you didn't miss something and that it is the root cause. Okay, let us continue. Okay, let's look at the effects or consequences. Effect: the risk of exposing the risk or exposure to the organization and or other encounter because the condition is not consistent with the criteria, which is the impact of the difference. So the effect statement answers the question, so what? And this is a critical element in getting management to act on the problem. This statement needs to explain the risk in business terms so that management can understand. So, just because, this is key, just because you think there is a significant problem doesn't mean that management agrees with you. Convincing management to see it your way may be the hardest thing that you'll do. Risk is generally expressed in terms of impact and probability, and at this point, the auditor has already determined that the risk is significant enough to bring to the attention of management. This means that the impact from the risk and the probability of the occurrence is such that it'll have a significant adverse effect on the organization. And it's the internal auditor who must convince management to agree that the problem is serious enough to address. So in trying to convince management that the problem is serious, you should explain it in business terms that they understand. Their focus is achieving their business objective. Just telling them that they didn't do something in accordance with a written criteria, whether it's a procedure, policy, or regulation, whatever, doesn't necessarily give them a sense of the significance of the problem. You need to explain it in a way that they understand. You need to show them how the problem could either hinder the achievement of their objective, it could possibly cause their operation to be ineffective or inefficient, it could possibly cause them to make erroneous decisions, or it could jeopardize the safeguarding of significant assets. All of those things could, you want to explain those things to management so that they can get a sense of the significance of the problem. For example, if the procurement procedure states that purchase requests should be properly authorized, it should be explained that unauthorized purchases could be fraudulent purchases. You know, it could be, and it could reduce the effectiveness of the operation. It could cause the purchase of unnecessary goods and services. So what you want to do, rather than just saying it's a violation of the procedure, you want to explain to management in a way that they can better understand the possible bad results of this thing. Okay? So it's also better to quantify the effects whenever possible. But one caveat, make sure that the numbers, when you use numbers, make sure they're reasonable and not inflated, because unrealistic numbers can diminish the integrity of the finding. Okay, so let's look at an example of effect. Okay, we've got 4 examples here. Continuing on with our little project. A says, unapproved time cards are inconsistent with procedures. B says, as a result of the 3 months where the inventory was not reconciled, $178,582 of excess inventory was purchased. This money could have been used for other purposes or invested at an interest rate of 4%. C says, dual review and approval of all transactions ensures that one person will not be able to alter a transaction. The average investment transaction for the prior year was $16.4 million. The total investment transaction for the year was $348.4 million. And then D says, a review of the credit card statement by the department head is good business practice. Okay, which of those, A, B, C, or D, do you think is the best write-up in terms of effect? A, B, C, or D? Give you about 30 seconds, and then we'll talk about it on the other side. Okay, A, B, C, or D. Okay, let's look at this. This case, there are 2, B and C are the best write-ups. If you look at B, as a result of the 3 months that were not reconciled, they tell management $170, almost $180,000 of excess inventory was purchased. Okay, they could have used that money for other purposes, or got a 4% or 4% interest rate on it. Okay, so this gives management a good idea of the significance of not doing those 3 months of inventory. Okay, same thing with C down here. They only had 1 transaction, if you recall, that wasn't properly reviewed. But 1 transaction could cost you $16 million. That's the average amount for each transaction, over $16.4 million. So it gives management an idea of the magnitude of one transaction. And they talk about they had over almost $350 million worth of transactions during the course of the year. But this is what should get management's attention. One hiccup could lose you over $16 million. Okay? Now, those are the kinds of things when you write up the effect that will get management's attention, or it should get management's attention. Now, if you look at A says unapproved time cards are inconsistent with procedures. Duh. I mean, that is so unconvincing. And the same thing with D. A review of credit card statement by department head is good business practice. So what? I mean, that is also unconvincing. B and C gives management a reason to look into this. A and D does not. Okay. Let's go on. Let's look at the keys to writing a good effect. Okay. Number one, you must determine if the finding is significant enough to include in the report. Remember what I said. Insignificant findings can diminish significant findings. Number two, you must convince management of the significance. Just because you think it's significant doesn't mean management does. And then you should explain it to management in terms that they can understand, whether it's money, reputation, legal penalty, whatever. Now, question. What should you do if you think there's a serious problem, but management doesn't agree? Now, if you really believe that the problem is serious, the IIA standard 2600 says you need to take it up a notch to the board, and both you and management make your case to both the board and senior management, and let them decide whether or not it's serious enough to take action. If they decide that with management, that's okay. They decide that they accept the risk, no problem. They can accept the risk. You will have done your job. You just want to make sure you keep all of your supporting documents in, just in case it ever comes up again. I believe it's better to have brought it to the board and then been overruled than to not push it forward. And the problem eventually manifests itself. Then people will ask, where was Audit? Where was Audit? But the key to this, however, is before you ratchet it up to the board, make sure that the problem is significant enough to take that significant step. Okay? Okay, let's go on. Observation and recommendation. And this is the last of the 5 attributes. Observation and recommendation. This is the audit results and suggestions on how to correct the problem. This answers the question, what should be done to correct the problem? Now, this states that this is the problem and this is how to correct it. Now, the recommendation should be in 2 parts. The first part addresses the current problem. The second part addresses the root cause to mitigate future occurrences. I wrote an article for the IIA magazine a few years ago, and it was entitled Killing the Spider. Killing the Spider. In it, I told the story of going up into an attic and seeing a bunch of spider webs all around. And you clean out the spider webs. And then 6 months later, you come back, and guess what? The spider webs are back. And they're back because you didn't kill the spider. And a lot of times our audits are that way. In the recommendation, the first part where it says address the current problems, that's where you're wiping out all the spider webs. And it's been my experience most of the time, a lot of times, it's the second part where in terms of addressing the root cause to mitigate future occurrence, that's where we miss out on. That's where you kill the spider, so you keep it from happening again. I used to tell my auditors that's really where we really earn our money. When we can go in there, if there's a reconciliation that wasn't enough, we can go in there and say, you need to check reconciliation, make sure everything's okay. But we really earn our money when we tell them, make the recommendation on how to keep that from happening again. That's where we kill the spider. Okay? So, also in terms of our observation and recommendation, you want to make, when you get to your recommendations, your recommendations should be very specific about at least three things. Number one, you want to know who will be responsible for the corrective action. You need a go-to person, not necessarily the person who's going to actually fix the problem, but someone you can go to see to it that it gets done. And you need to know exactly what will the corrective action be. Now, this will have been usually has been agreed upon up front, but you need to feel certain that whatever is going to be done is going to fix the current and the future problem. And then you need to know exactly when will the corrective action be done. You need a set time as to when it's going to be completed. I normally allow management to set that time as long as the time that they give me is of a reasonable length of time. And sometimes they may not be able to meet the time limit for a good reason, and that's okay. You just set another reasonable time. But what you do is you don't just let it hang out there. You need a time to bring this thing to an end. Okay? So let us look at our final example. Which of these following do you think is the best? We've got four possibilities. A, the supervisor should review the 77 unapproved timesheets to ensure that they're accurate. B, the manager of inventory should review the 3 months of inventory to ensure the accuracy of the inventory. Further, the manager should cross-train another person in the department to serve as a substitute when the primary person cannot reconcile the inventory account. C, going forward, the treasurer should review all transactions over $1 million to ensure that they are properly done. And D, the marketing department director should review the 4 statements that were not reviewed to ensure that the purchases are proper. Also, the director should research the reason why the 4 credit card statements were not reviewed and develop an action plan to mitigate future occurrences. Okay, which of these, A, B, C, or D, do you think is the best one? And we'll talk about it on the other side. A, B, C, or D. This one could be a little tricky too. A, B, C, or D. Another 15 seconds. Okay. This case got 2 answers, B and D. If you look at B, the manager of inventory, so it calls out the person, the manager of inventory, and what they should do, review the 3 months. Review the 3 months of inventory to ensure the accuracy of the inventory. So that takes care of the current problem, okay? That takes care of the current problem. Then further, the manager, calls out the manager, should cross-train another person in the department to serve as a substitute when the primary person cannot reconcile the inventory. That kills the spider. That one reaches into the future and keeps it from happening again, at least for this particular reason. Okay? Same thing with D. In this case, we got the marketing department director. Call out that particular person should review the 4 statements that were not reviewed to ensure the purchase is proper. That cleans out the spider web. Okay, and then also they should research and research the reason and bring back, make a recommendation as to how to keep it from happening again. So that one kills a spider. Okay. Now you'll note the one thing we didn't put in here, and when that should be, and that can always be negotiated, is the time by which each of these things should happen. Okay. They should review the 3 months of inventory to ensure the accuracy of the inventory. And generally, I like to give management the opportunity to tell me, well, when will you be able to do this? And give me a date as to when it'll be done. And then management should cross-train another person. I'd also give management, they need to give me a date as to when that will be done. Okay. Same thing down here. Review the 4 statements that were not reviewed. They need to give me a date as to when that will be completed. And the same thing for researching and coming up with a reason, a plan, an action plan to mitigate future occurrence. I would need a date for that. But like I said, I generally let them give that date, and they generally will respond in their response to the audit recommendation will give that date. And we will have talked about it before they give it, but that's how that process would work. Okay. Let's look at the keys for writing corrective action. A recommendation should address 2 parts: correcting the current problem and mitigating future occurrences. One where you clean out the spider web, the other where you kill the spider. Then 2, adequate follow-up requires exact action by management to mitigate the problem, name the person responsible for correction, and get the expected date of correction and implementation. Let me just say, naming a person to be responsible, you would not believe how effective that is in getting things done. When people see their names attached to the follow-up, that they're responsible for making sure it's done, you would not believe how effective that is in getting that done. Okay, so that's kind of the keys, but using a template for the 5 C's is an excellent tool for writing the audit findings. It lends itself to consistency to all the audit findings, no matter which auditor does it. And it ensures that all 5 elements of a finding are addressed. Now, and the other thing is you can copy and paste from the template directly into the report. So if anybody's interested in a template for the 5 C's and a template for the observation follow-up, they can contact the webinar provider, and they'll send you a copy of the template. Okay, so if you're interested, contact them, and they'll get you a copy of the template. Okay. Now let's take just a couple of minutes and let's talk about audit finding headlines. So, why is an effective audit headline important? Okay, the opening headline announces to the reader what the writer considers the most significant information of the observation. It gives the writer a chance to direct the reader to what they consider is the most important information. Now, this might be the most difficult statement in the report because you only have that one line to gain their attention. But when you can, take advantage of the headlines to entice the reader to look at what you wrote. Okay? Now, developing an audit finding headline requires time and thought. But there is no set rule for writing headlines. They can be developed from the condition statement, the cause statement, the consequence statement, or some other factors that's not listed here. What you want to do is determine what you want the reader to focus on, and then you want to craft your headline to guide them there. Okay? Okay, let's look at some examples of Look at some examples. This generic example, controls for bus operator time card needs improvement. I see that a lot, and that really doesn't tell the reader a lot. There's no particular focus. Doesn't help the reader at all. If they want to find out anything about it, they've got to read through pretty much the whole audit finding. What you want to do is you want to, and then once they're reading through, they don't have a focus as to exactly what they're looking for. You want to give them a focus. You want to guide their thought patterns in terms of reading the audit observation, and the audit headline helps you do it. For example, now if you wrote the headline based on the condition, it would be something like 11% of bus operator time cards reviewed were not approved. That gives the reader an idea of exactly what the problem is. Okay? If you use the cause as a basis for writing a headline, it would be something like lack of management oversight resulted in 11% of the bus operator time cards that were not reviewed. And then if you use consequence as a basis, it would be something like unapproved time cards totaled $676,738 over 6 pay periods. Now, as you can see, from condition to consequence, they got a little more harsh as you went down. The consequences really seems to be the harshest of the headlines, if that's what you want to use. But there are a number of factors that you have to consider when you're doing the headlines. Things like how significant is the finding? How persuasive do you want to be? Is this a repeat offense? And then you want to also consider management's possible reaction to seeing that headline. And I don't know, if you are subject to the Freedom of Information Act, you want to consider what persons outside the organization will be looking at that. Whether it's going to be a news crew from the newspaper or the local 5 o'clock news, whatever, you want to also consider that in framing your headlines. Okay? So everything depends. There's a lot of factors. It depends on what you want your reader to see. Where do you want to focus them? Okay. Now, I think that's pretty much it. Let's just recap very quickly. The IIA standards on audit reports is standard 24. IIA standard 2400, which says that the internal audit must communicate the results, and usually that's going to be in the form of a report. And 2410 says that that report or that communication has to include the audit objective, the audit scope, and the audit conclusion with the recommendation and action plan. And then we also talked about the best practices that the IIA recommends under audit report, communicating assurance engagement results. And that's where we got the 5 C's. Also, the standards for in terms of criteria is a standard for comparing what's actually being done. And examples are procedures, policies, regulation, best practices, etc. And you can't conduct the audit without the criteria. You have to have an objective criteria. And the criteria should be quoted verbatim with the exact location of the quote. And the ellipsis mark helps to identify only the relevant information. Okay. In terms of the condition is what's actually being done based on the field work, and is used to compare with the criteria. And you use, in the condition, you only want to use factual and accurate information. And if the condition doesn't compare to the criteria, there may be a basis for a write-up depending on the significance. In terms of the cause gives the reason for the difference between the criteria and the condition. The root cause is required to be able to give a viable recommendation to keep it from happening again in the future. And the root cause cannot be determined. If the root cause can't be determined, you can recommend further research either internally or externally. But whatever they bring back to you is still your audit. So you have to be comfortable with whatever action plan they bring back to you. In terms of the effect describes the impact on the organization, and it should be significant enough to get into the report. Remember, insignificant findings diminishes significant findings. And it needs to be explained to management in terms that they understand, like money, reputation, things like that. The audit observation is the results and suggestions on how to fix the problem. And recommendation should be in two parts. The first part addresses the current problem. The second one addresses the root cause to mitigate future occurrences. And in terms of being able to do an adequate follow-up, in your write-up, you need to make sure you get, in the follow-up, you need to know who's going to be responsible for doing the doing the recommendation, what exactly will be done, and when will it be done. You need those three things to really do an adequate follow-up. And then the last thing, the audit finding headline, it captures the reader's attention. It announces what the writer considers the most important information, and it can be based on a number of things, including the condition, cause, consequences of whatever other considerations, depending on what you want to have the reader focus on.